Okay, hey, welcome, guys. It is Sunday night, July 20th, in preparation for Monday, July 21st, trading day. Before we jump into the market analysis, we are still on the Market Wizards interview with top traders by Jack Swagger. We are going over the chapter regarding Tom Baldwin. We wanted to pick back up with what we ended with on Thursday night. He said, it's like any job. If you stand there long enough, you have to pick it up. It's just a matter of how long you can afford to stand there before you do. Um, all right. And then Swagger says, do you really believe that? Tom says, well, the average guy might not be a multi-million dollar trader, but if he stands there for 5 years, he would have to pick it up. It's just like a job. You don't start any job and feel comfortable in the first 6 months. So Swagger says, but you did. He said, yes, but I started as a one lot trader, and I wasn't really comfortable because I had to make money. I only had $25,000 to my name. Swagger asked, at what point were you confident that you were going to be successful? Tom says, that's an interesting question. You're never really confident in this business because you can always be wiped out pretty quickly. The way I trade is live by the sword, die by the sword. There is always the potential that I could get caught with a big position in a fluke move with the market going down, going to the limit against me. On the other hand, there is no doubt in my mind that I could walk into any market in the world and make money. What percentage of your days are losers? Asked Swagger. 1 day out of 10. Swagger says, has that percentage changed over time? He said, that is over the long period of time. Swagger says, from your perspective, what does the average trader, that is the public trader, do wrong? Tom Baldwin says, they trade too much. They don't pick their spots selectively enough. When they see the market moving, they want to be in on the action. So they end up forcing the trade rather than waiting patiently. Patience is an important trait that many people don't have. Swagger says, waiting for the right spot? Question mark. Tom says, yes, I bet most people are probably ahead after their first 5 trades. They think, well, this is great. It's like free money. But then they forget that the reason they made money on their early trades was because they waited a long time. They said, I bet this is a good spot to buy because I've seen the market act that way a lot of times. They made money, but then all of a sudden they're doing a trade every day. The next thing that happens is that they lose on a few trades, and invariably they don't know how to take a loss. They made money to start, and before they know it, they are at even. Now they hesitate. Where do I get out? The minute they hesitate, the market just keeps going. Now they, pardon me. Now they are losing money, and they say, "Well, but if I sell here, then I'm going to lose $1,000." They don't like to lose $1,000 when they're getting paid $500 a week. Now all of a sudden they are thinking about the money. Swagger says, once you start thinking about the money, you're dead. Yes, that's what usually happens to the public. What is your own way of handling losses? Asked Swagger. Get out. He said, Swagger says, quickly? He goes, yes, if I can. My point is that I have a lot of patience. I can wait. If I know it is a losing trade, I wait for what I think is the optimum time to bail out. Then I try to get out. Swagger says, so if you realize that you don't like the trade anymore, you'll get out, but you'll pick your time of getting out. Yes, but I will get out. Swagger says, let's say you're doing that on a day when the market is a one-way street. And at what point do you just have to cough it up? Tom Baldwin says, well, it depends upon how far it's gone against you. If it's against you in a long way, at some point you just throw in the towel. Those days happen maybe 3 or 4 times a year. You just start bailing out. Swagger says, but you usually have a feel when that is the thing to do. Yes, because it has happened before. Swagger says, normally, if you're just a bit behind in the trade, you are better off to let the market move a little bit in your direction and try to sell on strength or buy on weakness instead of just trying to dump it in a hurry. Right, says Baldwin. Is that a key element to your trading style? Yes, never give up on a trade. Many traders who are in a losing trade will just get out because they were taught that you have to have discipline. Great. Those traders will always be around. But if they had just some patience and said, yes, it's going to be a losing trade, but instead of getting out here at 7, maybe if I wait and just sweat it out for another minute, I can sell it at 10. I kept this section in here because Dustin, I've seen you and Jacob trade that way, where you feel like it's going to be a losing trader or losing trade, but you have a little bit of patience to try and get out at a little bit better spot, whether that's a 2 3 point loss or a quarter point loss or 1 point loss. So he's saying here that whether you see it's a loss and you just cut your losses and go to the next trade, that's going to be a winning mentality. But the way he does it is kind of the way you guys are honing your skills on that. So I kept this in here to reinforce that to you that a market wizards trade that way as well. Jack Swagger says, is it a matter of just wanting to get out to stop the pain? And if they are willing to stand the pain a little longer, they would be better off. Is that a fair way of putting it? Tom Baldwin says, yes. They give up too quickly. In most cases, if you don't give up, you might be able to turn a 5-yard loss into a 2-yard loss. Okay, over here, Swagger says, what kind of things do you look for in a chart? He says, I look for key points such as the highs and the lows for the week, the halfway back point. That sounds a lot like a 50% retracement. Interesting thing here, guys. Tom Baldwin started trading in 1982. Dustin was born in, I think, 1986. He wasn't even a twitch in his daddy's pants at that time, and Tom Baldwin was stealing his ideas. It's crazy, 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 crazy how he did that. So anyway, he looks for key points such as highs and lows for the week, the halfway back point, and consolidation areas. Swagger says, do you use the chart for short-term or long-term perspective? He said short-term. Short-term, in your case, means what? Asked Swagger. And Tom answered, said, I guess as short as possible. You get into a trade, you make money as fast as possible, and minimize your risk. Swagger says, I have noticed that a lot of times bonds will take out 1 and 2 week highs or lows by a few ticks and then pull back. The price action almost seems like a trap for the breakout players. Is that a pattern in the bond market? Yes, it always has been. And I wanted to keep that one in there and end on that today because that's kind of what happened on Friday's price action. Friday's price action, we new highs on the day. And then sorry, let me leave my other new highs from the day, and then we just kind of fell off for the rest of the day. So I wanted to read this on my my daily report card. What I learned coming into this morning, the volume was a lot higher given a Friday morning environment. The breadth was falling off from around over 1,000 to under 0 in the first hour. It is clear as day, now that the markets are closed, that was the sellers coming in at the all-time highs and closing out prior to the weekend rather than wanting to hold profits into the weekend. So that kind of corresponds with what that last statement there was from Tom. All right, so wanted to look at the daily chart here. Notice that we did close above this 3-bar. So this was our original 3-bar. We had some other stuff in here, but basically we've been this price overlap. We did close above that high spike here in the ES. So we want to be aware of that. So we want to be cautious being too bearish. Conversely, we are still in this same pattern here on the daily where we have not broke down below. Although the last couple of days, we have seen the slow line on the LBR 310 start to come back down. It has not come back below the 0 mark yet. So again, we want to be cautious being too bullish there. The 15, or I'm sorry, too cautious being too bearish on that. So the 15-minute, I did want to point out this on the LBR 310 here. We kind of had a little bit of bullishness into the close. We kind of came down, did that inverse middle finger, what I call like an inverse middle finger on the smaller time frame charts. But moved down, kind of found this support here on this bullish LBR 310. And kind of a buyers coming into the close here to close above this 33.25. Also, I wanted to look at this 60-minute version of this. So the 60-minute version of this, we have not yet hit this the 60-minute moving average here, which happens to be down here at 23 on mine, or 23.63 on my Keltner channel. So Sorry. But so if we have a break below these prior lows, which right now that moving average is right at those lows, a break below those prior lows could turn the tide a little bit and be in line with Friday morning selling. So we could have a little bit of a turn of the tide there. So even though a lot of the stuff I'm pointing out here today is bullish in nature, we want to be aware of when that tide turns. Um, let's see, that was 60 minutes. Okay. Um, then I want to pull over the regular 60-minute chart, not just the .D chart. Uh, so regular 60-minute chart, I kind of marked this from that high to this low move, 50% retracement. The 38.2% retracement is just right under this Keltner channel moving average, 20-period moving average. Do we reject off this 20-period moving average or the 50% type zone here and do another move back down? Or do we find strength and kind of come back up here because of some of these other bullish things that we're seeing? So right now, this setup here could have a little bit of a rejection off this 20-period moving average, but we'll see how if we get follow through on that tomorrow. The internals, let's get this out of the way. On the internals here, you notice that we did close below that three points down. So 3-point move up is greater probability of sell, whereas 3-point down is a greater probability of buy. So we had this spike high up here on this tail that was left here at 1948. So 1648 is 3 points down. We closed at 1641. So we did close 3 points down. So that's bullish basis on the board again as of the close on Friday. So again, there's a lot of bullish bases there, breaking out those highs, closing above that 3 bar, a lot of things on there. But we want to be aware, like if this tide changes, if this, the VIX starts moving back up here, be aware of that. Because this could be a higher low in the VIX, so to speak. Come down here, check this pocket, and then put in a higher low and start moving back up for additional bearishness. However, if we have continuation of this down here, we want to respect the bullish nature of that as well. All right, guys. So yeah, long and short of it could go long, it could go short tomorrow. Happy trading this week, guys. Let's start the week off good. And we will follow up tomorrow. All right, guys. Thanks.